All right, let's get started. So hello, everyone, and welcome to today's webinar. My name is Joyce Chu, Head of Sales Structuring at InvestSuite, and thank you very much for tuning in today. We have a great panel interview upcoming, but before we dive in, a few administrative items for me. If you have any questions for the panel today, please share them in the Q&A box, and we will address them at the end of the session. As well, today's session is recorded, and we will share the relevant highlights by email after the session. Your moderator today is Robert Crossley, International Head of Industry Advisory Services at Franklin Templeton. Robert, over to you.
Thanks very much, Joyce, and welcome everybody. We're here today to discuss how human expertise and AI can be combined to create better investment experiences. We can see the same dynamics playing out across most industries, not just investment management. There's a shift from products to services, from standardized to the personalized, and from one-way communication to two-way interaction. And technology has empowered individual consumers in so many ways, and they've become the focal point of competition. But while behavioral science has long been applied in consumer industries, its application to creating better outcomes for individuals in the realm of investment advice is really only just beginning. And it sounds easy in theory, but translating that into reality and delivering better end user experiences requires deep partnership and sharing of resources and expertise. That's why I'm delighted to welcome Sven and Christophe, who come at this problem from different but highly complementary perspectives. Sven Moons is InvestSuite's customer insights expert, an author of their trilogy of white papers on goal-based investing, and is an expert on the human experience of goal setting and investing. And Christophe Vande Walle, digital solutions specialist in EMEA at Franklin Templeton. He's going to bring his asset management perspective and digital expertise to bear on our discussion of offering compelling investment journeys. So Sven, Christophe, welcome. It's great to have you here. Christophe, let me start, if I may, with an obvious question. What happens when Franklin Templeton, which manages 1.4 trillion of client assets, teams up with InvestSuite, a B2B wealth tech provider? What does that mean for clients? What value gets created by that combination?
Well, that's a great question, Robert. And first of all, thanks for having us. We are indeed an asset manager. So that means that investments are really baked into our DNA. But we also have a few very interesting digital initiatives across the firm, ranging from incubator programs over strategic investment capital to customized digital wealth solutions. We are, however, not a technology company, and that is why we're very excited to work with a top-notch B2B wealth tech provider like InvestSuite. I would say that anyone with the ambition to offer very compelling investment journeys to end investors can really benefit from our combined strengths. And that is, first of all, our deep investment expertise and our AI ML capabilities, but then combined with their cutting edge technology. But I think the key takeaway is that InvestSuite is not just a technology partner. They are so much more. I think thanks to their experience, but also research in behavioral finance, together we can make investment journeys even more compelling. So together we have, I would say, a very attractive value proposition.
Sven, from your perspective, what's your take on the value created by the combination of capabilities of both firms? And did Christophe get it right?
Well, I think we should actually scream it off the rooftops. I think together we have done something amazing. I mean, both we at InvestSuite and also Franklin Templeton, you guys have done a lot of research on what the future of better investment experience could look like, and all this work culminated in the solution that we built together. So I think it's great. It basically incorporates Franklin Templeton's AI-driven goal-based engine that they created into our robo-advisor. And so what the end user is going to get is a lot. It's going to get a personalized investment portfolio that is also intelligently and automatically being optimized and rebalanced the whole time in order to reach a very personal investment goal. And all this, in fact, is facilitated in a digital platform, which, at least in my mind, I think is a very exciting path to better investment experience for all.
Christophe, I just want to pick up on something Sven just said then, and paraphrasing, he said that the pathway to better investment experiences is goals-based investing. and that needs to be driven by an AI and incorporated into a robo-advisor. Can you say a bit more about that, and how is that different from the type of investment experiences that a client gets today, for instance?
Well, let me try to break this down into two parts. First of all, why is it different from traditional advice? And secondly, why is it different from goals-based investing as we know it today? Well, first of all, why is it different from traditional advice? Most people receive investment advice from a human financial advisor. Nothing wrong with that. On the contrary, a lot of investors receive pretty good investment advice with a pretty good experience. The point I want to make is that investment advice has evolved tremendously over the years. And that is leading to a few very interesting use cases to essentially rethink investment advice as such. Now, two clear use cases I want to highlight here. The first one is access to investment advice. To me, it has become increasingly true that it is more and more challenging for especially mass retail and investors to access investment advice because of many structural reasons, ranging from the shift to more fee-based advice to higher risk and compliance standards and so on. Now, AI-driven or automated goals-based investing incorporated into a robo-advisory structure pretty much offers a solution. Why? Because it will replicate as close as possible that human advisor experience and even improves it. And so also from a cost-effective or a cost-efficient perspective, it is a very good solution to offer personalized advice in a scalable manner. Now, the second use case to me are financial advisors. Over the years, and that's applicable in many countries, they have seen their workload increasing with much more tasks on top of investment advice or client engagement. So the bottom line is that they also need to manage not only more clients, but especially very digital savvy clients who expect an increasingly almost hyper-personalized approach. And that is, again, where automated or AI-driven goals-based investing comes into play. Because you can simply implement it as a tool to better equip financial advisors so they can better advise their clients. So a hybrid solution, almost bionic advisory. Now, the second part of my answer, why is it different from goals-based investing as we know it today? Well, let's be honest, traditional advice is already helping investors to reach their goals, right? And yes, digital goals-based investing tools are already available on the market. But I think that the way we look at AI-driven or automated goals-based investing together with InvestSuite brings it to a whole new level. One that is very human and one that is linked to very tangible objectives, not just numbers. And to be honest, in our minds, a real and I would say an impactful goals-based investing experience really has to incorporate three conditions. It has to be, first of all, real goals. You have to be able, secondly, to dynamically support investors in a personalized manner in their journey towards these real goals. And thirdly, you have to be able to track these goals in a very efficient manner.
Sven, if I could turn to you and build on what Christophe just said. Christophe has explained there are two clear families of use cases for using AI in a goals-based, goals-driven investing framework within a robo. There's there's a great quote by W. Edwards Deming, which says that without data, you're just another person with an opinion. What does the data from your research say, and do you agree with Christophe?
Yes. I mean, the thing that Christophe mentioned there, that it's really about supporting and guiding that mass affluent or that mass retail affluent markets of European investors. I think that's completely true. I mean, what we keep finding in our customer research, specifically in this segment, is that elements like guidance or customer support, they're always ranked highly as elements for a strong value proposition. So people really desire it. This is the case for all types of investors in the spectrum. It is true for this subset of execution-only investors, about 20 to 25% of the market, depending on what country you are investigating. I mean, they they require support and guidance, but it's also true for the type of investors that prefer robo-advisory. And by the way, this segment we found is almost twice as large as that execution-only market. And what we also found is that this guidance and support in a robo-advisory situation can actually take on different shapes. Right? What we found is that young people, for instance, they seem to prefer a robo-advisor. They can, let's call it, manipulate themselves, where they can set the parameters themselves so that they can have a feeling of control, at least, of what is happening with their investments. But on the other end, you've got mainly older investors that have a higher preference for this hybrid proposition, where a human advisor is, so to speak, powered by an AI tool. It's almost what, Christophe, you just said it there. I think you named it bionic advising. Well, I think it's true, but maybe this kind of wording might scare off some of the older investors.
Well, let's come back to you then, Christophe, on that bionic advisory. You said there are 3 key elements for an impactful investment experience. You said the goals have to be called what you call real goals. You have to be able to dynamically support and coach clients in a personalized manner in their journey towards them. And you have to be able to track that progress efficiently. Those are 3 big statements. Can we unpack those to the audience, please? So why is it so important to start with real goals, and what are those real goals?
Well, that's a very good question, and I will let Sven elaborate a little bit more on the concept of real goals. But let me very respectfully step a little bit onto his territory, and I know I'm walking on very thin ice here. But as part of our Franklin Templeton Academy, so our educational program, we have been advocating for many years now that goals-based investing can really help to mitigate behavioral biases associated with investing. And so herding or following the crowd is a very typical one, where investors almost overreact to present events and also news flow, which often leads to a tendency to buy high and sell low. And this is, again, where automated or AI-driven goals-based investing will really help investors to systematically stay focused on their long-term goals, stay invested, and on top of that, also benefit from the power of long-term investing. And I think that's also a very attractive value proposition to essentially convert clients from savings to investments, which is often a big challenge for financial institutions in, I would say, many countries across the globe.
Sven, Christophe said this is one of your specialist subjects. So what do you mean by real goals?
Well, real goals. I mean, if you look at it from a user's point of view, I should say that all investments actually have a goal, and they are therefore goal-based, right? Mm-hmm. Because investments are always driven by some kind of higher order motivation, psychologically, or an end state that someone desires, right? So I mean, what would be the opposite of goal-based investing? Does anyone just aimlessly invest for no particular reason without a goal? I mean, that doesn't exist, right? So now there's a lot of literature on the psychology of goal pursuit. Most of it deals with medical topics, like weight loss or fitness goals, those kind of things. But many of the psychological concepts from that literature can also be applied to the pursuit of investment goals. And to zoom in on the question that you had there about real goals, right? I like to quote this very famous finding from 2 authors. They're called Latham and Locke, the godfathers of goal pursuit psychology. Anyway, they said that, I'm going to quote them here, goals that are specific and challenging but feasible lead to higher levels of task performance than vague or easy goals. So what does that mean? That means that people with a goal that is clearly defined and is not too easy will perform better than those who just claim that they will do their best, right? And I think, to use a dietary or a dieting analogy, for instance, if I say that my aim is to lose 2 kilograms by the 1st of July, right, I'm more likely to actually do so than if my aim is to just lose some weight. So this is very important. And actually, this is a huge problem for the financial industry, because in our research among 4,700 European investors, we learned that only 22% of them have a specific end amount in mind when they start investing, and only 7% have a return percentage in mind. So there's a staggering 70% of respondents in our survey that indicated that for their number one most important goal, they actually do not have a specific end amount or any percentage in mind. It's very general goal, in fact.
So Sven, you've talked, well, you said that we've been talking about the importance of goals being specific, so the what or the how much, but we haven't really talked about the when part of it. So the July in your weight loss example. In your research, do people tend to have fuzzy time horizons, or are they specific, and does that matter?
Well, it matters. It does matter. As I say, it has to be specific, and specificness on a temporal frame. I think that's really important. And what we found in the research is that about half the investors in our survey, so a little better than the 22% we talked about earlier, about half indicated that they actually have no time horizon in mind. From those that did have a time horizon in mind, again, about half of those entered ballpark figures into the survey. And to be specific, as we're trying to be specific, 24% of those respondents actually wrote down in the survey that they had either 5 or 10 or 20 years time horizon in mind. So those are very ballpark numbers. So investment goals, to sum it up, they're usually not specific and not challenging, and that's actually detrimental for encouraging real goal pursuit, right? And so the main problem, or the main thing there being, is that it's much more difficult to motivate someone for something abstract and far away than it is to motivate someone for something very concrete. And I think that's exactly what we did with Franklin Templeton, in the goal-based investment engine. Get investors to set specific goals, or we're saying about real goals, so people can effectively, be guided towards those goals. That's what we're doing.
Sven and Christophe, thank you. So I now understand what real goals are and why they're a key requirement for better investment experiences. But the second condition you stated was the need to support and guide people towards those goals, and especially in today's digital world with lots of competing demands for our attention. So Christophe, that all sounds sort of very sensible, but how do we actually do it in practice? Is that where the engine that you mentioned comes into play?
Well, yes, Robert, I think that's absolutely spot on. Yes, you need real goals, as Sven also explained, but I think it's absolutely vital to have a powerful algorithm. We call it indeed an engine to really optimize the probability of reaching these so-called real goals. Now, goals-based investing, as most of you know, as a concept has been around for some time. It's not new, but it is the effective implementation which is relatively new. So our artificial intelligence and machine learning team did a lot of research on this. And so this culminated into an award-winning research paper. And so what they did is that they created a new and very exciting methodology for optimizing the probability of reaching goals. And that was eventually translated into the engine. Now, for those who like the technical details, I'm not going to go into too many details, but the engine is using a model called dynamic programming. And that is one of the many reasons why we can actually offer an investment experience, which is, to me, fundamentally different from other goals-based investing concepts. Why? Well, first of all, the engine really optimizes in function of investors' goals. It's not just optimizing in function of an investor's risk profile, again, as we have seen with other goals-based investing concepts. So that actually means that, for example, we can indicate to investors at any point in time what their precise percentage probability is of reaching their goals. What we can also do is that we can instantly adjust the pathway to the goal and respond to any changes requested by investors. For example, if an investor wants to change the amount to invest or the monthly contributions, etc. And that is exactly, I think, the kind of instant and continuous support investors need, and especially in a digital journey.
Christophe, could I ask you, so a question's just come in and we're doing well for time. So I just want to ask a question which is very pertinent to what you just talked about there. And how do you visualize the status of reaching that desired goal? What does that customer journey look like? How do you actually keep track of that?
Well, I think that's one of the things that we've been working on together with InvestSuite. And so it's all about the engine, but it's all about how you construct the actual journey. So together we've constructed a very comprehensive demo with a very comprehensive investment journey where we actually guide clients from the start until the end with a lot of recommendations that are generated by the engine. So it's not just the engine as such, but it's also the kind of behavioral, I would say, experience that InvestSuite has put into that investment journey that will help to track these goals.
I think this is one of those instances where a picture's worth 1,000 words. So we should probably, I think seeing it in action probably will answer that question.
That will bring it much more to life, as always. Yeah, of course.
Coming back to you, Sven, and building on what Christophe just said, we were talking about that continuous support for those real goals. Again, coming back to your research, is that what clients need, that automated continuous support to help them achieve the goals? Is that what you're seeing?
Yes, absolutely. And I would even go a step further. So our research shows that these retail investors not only need this, but they really expect this kind of support as well. And what I can do maybe is ideal. So I'll give you a few examples from survey results that illustrate what kind of support investors expect. So I'm going to give a few examples. For instance, when we asked investors if they preferred a robo-advisor that, on the one hand, either checks whether a goal was actually feasible, or on the other hand, one that accepts any goal that they had in mind, right? 70% of the respondents preferred the former. So investors expect a feasibility check. That's one thing. Another question we put forward was, do investors, prefer a robo-advisor that proactively keeps them in the loop about how they're doing? You are here on your trajectory or not, or one that doesn't bother them with all those prompts and messages and just responds to questions, for instance, right? And what we saw was that 75%, that's a big number, prefers the former. So proactive information, tell me where I am. And the last example, maybe to illustrate this, is when we asked investors if they preferred this robo-advisor to speak everyday language, normal conservation, how do you call that, conversational language almost, or one that uses more detailed financial vocabulary. We saw that 71% prefer the former. So investors expect really this kind of everyday language. And it's these things, it's these kind of findings that we learned that we're now really incorporating into the design of the product.
I think I find that fascinating, Sven. So just to recap for our audience and to make sure that I'm understanding correctly, we need people to have what you call real goals. People need support and guidance to help them achieve those goals, and there needs to be continual engagement during that journey to help them track their goals and maintain that motivation. Christophe, so first of all, is that right? And secondly, the practical question of how does that actually work in a digital environment?
Yeah, so I just mentioned a couple of items already, right? I think the user interface and the behavioral input from InvestSuite is a big help to do all of this. But of course, I also talked a lot about our dynamic engine. And again, one of the additional benefits of the engine also apply to the tracking of goals, right? And so what I mentioned before is that thanks to the engine, we can actually provide these continuous recommendations for investors to, again, further optimize the probability of the chances of reaching goals. And remember, it always has to be cost efficient from a business perspective. So the engine has to do this in a scalable manner and has to be able to handle not only multiple investors, but also multiple goals. But I think, again, the beauty here, and it's also the beauty of our partnership, is that all of our complexity, the investment side, the AI, ML contribution, that really stays under the hood. And the contradiction here is that it is because of this complexity that clients will experience actually simplicity. And that simplicity is the simplicity of a very human-centric, personalized, I would even call it intuitive investment experience, which is effectively a coaching experience. And again, important, Sven just mentioned that it has to be in a language investors understand. I absolutely agree. Jargon is absolutely not done. And again, all of that is, in my opinion, how today investors really want to experience investments.
If I can pick up, if I can, on that idea of coaching, the coaching experience in a digital setting, that seems absolutely central to what we're talking about here. Sven, can you elaborate on that and tell us more about that, please?
Yeah. So the idea of coaching people towards different investment goals, it's really important to think it through from a behavioral perspective as well, because what we found was that people do indeed have multiple investment goals. How many depends on how you ask them. If you ask people with an open question, how many goals do you have, or which goals do you have, you will find that 80% of people have just 1 or 2 goals, right? So it's 1.6% or 1.6 goals on average, you will find. If you use a closed question, so ask people to choose from a list, you'll get an average of 4.3 goals. And what we also found was that people are actually really bad at articulating their investment goals. And so helping them with a smart choice architecture really is a must if you want to help people out there. So people have multiple goals, true, but they also prioritize goals, and they distinguish between those that are absolutely necessary and those that are not. In psychology, the priority goal is also called a chronic goal, because it's top of mind, it's readily accessible by the mind, and so it's actually pretty easy to remind people of their chronic goals with very simple cues. Like, for instance, you can ask people to use pictures of the children if you want to invest for your children for an inheritance, for instance, or of the house in Spain that you're investing for. You can do this, and these cues will energize their commitment. And doing this kind of stuff and coaching people to their goal, I believe personally, is of the utmost importance. Right? People need to be able to respond to action cues that help them reach their goal, and they also need to be able to see that those actions have a real impact, right? And you need to give people options here, and Christophe mentioned that, right? People need to be able to do stuff, contribute another lump sum of money to their goal, or increase their monthly contribution, change a time horizon, maybe give up less important goals, really at the service of that chronic, that most important goal. And these kind of options, these kind of things that we give people, help them to be actively engaged, and it avoids what psychologists again would call this state of learned helplessness. And learned helplessness, to end with that one, I mean, there's a horror story. Helplessness, that's the feeling that people get when they repeatedly experience these negative situations that they believe they cannot control or change. And basically they just stop trying, and they say, this investing thing, it's never going to work for me. And I think with goal-based investing, what we're doing here, financial institutions can really make clear that the opposite is true, right? Yes, investing does work for you and will help you.
Whilst you're speaking, Sven, a question's coming from the audience, sort of just drilling a bit deeper on what you just said. And the question is, what about client interests about a wide versus a small range of assets in their portfolio? Did the research you did was that just for funds, or did that take into account broader assets or assets more broadly?
It was very broad. So when we didn't specify specifically what kind of universe was being used, we basically said investing in, and what we described are traded assets. So it was bonds, stocks, ETFs, etc., etc. So the whole list, we summed up a number of those instruments just to highlight, the breadth of opportunities there. So it's very much on traded, on securities. So not on real estate, for instance, but securities. That was the setup of the survey.
Understood. Whilst we've been talking, there's been a number of questions coming from the audience, and we've got a few minutes left, so I'd like to address a few of those if we could. And Christophe, if I could come back to you. In essence, the question's asking, can you elaborate on the relationship between data and client experience, please? What is that link, and why is it so important?
Well, that's a very good question. I think, first of all, from my perspective, overall, any successful business solution needs to be centered around the client, whether it's in finance or any other industry. Now, data is what I think we use to deliver on this, and also one of the ways we can improve products we offer to clients, because the more data we have on clients, That means that we have more personalization because he can better anticipate and also predict some of clients' behaviors. Now, to harvest, to analyze, to process this data, and also deliver some sort of outcome, that is where I think machine learning and AI comes into play. And to me, machine learning can mean many things. It can refer to the actual method that creates a model. It could also refer to a reference to a model-based learning process. And that is exactly to come back to our engine, the idea behind the engine. It's using, as I mentioned before, dynamic programming as a model to learn how to harvest, to analyze, to process data, and to deliver an outcome which eventually will lead to a better service and also a better investment experience for clients.
Next question, and this is, I suppose this is to either of you or both of you. Is the future one of hybrid robo-advisors, as we've been talking about today, or will it be humans at one end and machines at the other and everything else in between? What do you, just your personal opinions, what does that future of the sort of spectrum of robo-advisors look like? Is it going to be really human assist, so AI, human assisted AI robos? Is that the future?
Well, maybe if I can start from my perspective, it's of course always difficult to predict, but you have to look at it from a segmentation standpoint as well. As I mentioned before, there are some clear use cases where purely robo-advisory makes sense for end investors. And that's, again, especially if you look at some of the mass retail clients. But then again, I think hybrid robo-advisory is something that could apply to every potential segment out there, right? Ranging from mass retail to affluent, all the way up to private banking and even wealth management beyond or ultra high net worth individual management. So I think it all depends on the use case, but I think the bottom line is that whether it's going to be a hybrid tool or a self-service tool for clients, it's definitely something that will grow tremendously over the next couple of years.
Yeah. And I think it also has to do with the customer segment that you're approaching. So in our research, we found that, you know, the more digitally mature, so if you ask these kind of questions up north in Finland, people are going to be much more, you know, on their own and maybe even dismiss more the advisor and go straight for digital. And also age cohorts, right? Age groups differ quite substantially there. But on general, what we found is that when we asked people which kind of tool they prefer to use, like an execution-only platform, robo-advisor, or different propositions, and we crossed that you know, the results from that question with another question, namely how people want to do this. They want to do it either on their own, but with some help, someone else doing it and having a say in it, or have someone else do it without having a say in it. I mean, you know what these are the different types of contracts you could propose. What we found was that even for the robo-advisor, a majority of people says, I would like to do it myself, but have some professional help to do it right. Right. So the majority of people basically say, I'd love to do it myself, but I would love to have some help doing it right. And I think this puts a lot of incumbent players, banks, in a pole position to start offering this kind of service, because people in the end, they will install this kind of app, but they would love to have someone to speak to. And we find this again and again, you know, the ability to call a call center, to ask questions, etc. It's really key. So this is, I think, almost a soft version of hybrid advisory as well.
So as part of what you're saying, Sven, are you underlining the importance of differential implementation, or you should expect different results in different markets?
Well, I think you need different ways of doing it. If you're going to address 20-year-old Finnish people, it has to be do it yourself. If you're going to address the bulk of the market, you'll have to be able to do it themselves, but get some help from someone if needed. And if you're going to address Belgium, we're the most, let's say, conservative. If you address Belgian boomer generation or older, well, you're going to need an advisor, most definitely. So I think you would need this breadth of services that you deliver. Yeah.
And here's a question I was half expecting with what's happening in the news at the moment. And I suppose no discussion of AI would be complete without mentioning ChatGPT, given the coverage. How should we, let me reframe the question. How should we think about AIs like ChatGPT? Is that relevant to what we've been talking about here? Or should we think about that separately and it's really a red herring? I don't know whether that's for you, Christophe, or for you, Sven, really.
Well, let me try to formulate an answer on that one, because it's indeed one of the more popular topics which we have come across over the last couple of weeks. And to be honest, this is completely different, but I recently watched Everything Everywhere All at Once, that great movie where all events could have parallel outcomes in different universes. But the funny thing is that ChatGPT is actually happening now in our universe, right? And to me, it's all about moving that state-of-the-art artificial intelligence to the next level, and also really demonstrate the power of, and I think Sven mentioned that before, the power of conversational intelligence, right? But I think the bottom line is that besides the applications we have seen so far for search engine or educational purposes, the next step is to really try to build business models on top of this and to actually start monetizing this. Now, we at Franklin Templeton and of course at InvestSuite, we're actively following the developments of this type of software. And to be honest, yes, I think it could be going forward a very interesting additional feature to support that coaching model that we have created together with InvestSuite. But it's still early days, I would say.
Sven, I can see you smiling.
I completely agree. I completely agree with what Christophe is saying.
We're running up to time. Just to answer a couple of housekeeping things. Someone's asking, I've missed the beginning, will the stream be made available? I believe the answer to that is yes, and Joyce will confirm. But I think coming to the time, sorry to those of you who submitted questions we didn't manage to get to. We can answer those offline. It only really remains to thank you, our audience, and thank you to Sven and Christophe for sharing their views and findings so eloquently with us today. Thank you to InvestSuite for hosting us here today, and I'll hand you back to Joyce to close things out. Thank you.
Thanks, Robert, and thank you again to the listeners. Just a few administrative items. If you want further details about our solution, including technical details of the engine, as was requested in one of the questions, the best way to experience this is to ask us for a demo, which will bring it all to life. We will send a recording of the session and a follow-up email with the highlights of this webinar. And as mentioned, if you have any questions, don't hesitate to contact either myself or Christophe Vande Walle. Our contact details will be in the email we'll shortly send to you. Thank you again and have a great day.
Thank you.